at any rate. And today Apple was gapping up, so I really honed in my focus on Apple. All right. So just a couple of the things that I recapped going into today on Apple. I said I wanted to see, under my what to watch for section, I wanted to see a break and hold of 590. And I wanted to see, no, this isn't being recorded. And I wanted to see the volume pace at the open set up for a 20 million share day. And that would be the bullish setup to me. And so basically bullish setup was 590 break and hold with volume pace. Target would be 560, that was the 200-day moving average, and then 600. The bearish setup to me that I was looking for potentially was a fade off of the gap. So gaps are tricky, okay? And the way I like to play gaps is I like to take the opening price, and then I like to see, does it stay closer to the opening price, or does it kind of move away from the opening price? So for instance, on Apple, the opening price was $593.65. And I made a note of that right away, okay? And you could see, if we zoom in here, so this is our 1 minute chart we're zoomed in on. So if you just look at it, open at 593.65, within a minute it went below that opening price, okay? And then through the first 20 minutes, it was never able to regain that opening price. So that kind of sets up my bearish bias, okay? And what I said at 9:26, I noted on 11:26, Apple gapped and ran. If you go back to 11:26, you can see that where's 11:26? Here it is. So Apple gapped up, and you can see that on this day, Apple never went below where it opened. It opened at 575.90. That was also the low. It never went below that after the first 15 minutes of the day. So, I took the last time it gapped and ran, and I compared the action this morning at the open. I made sure to be aware of what happened last time it gapped and ran. And the last time it gapped and ran, it was able to stay above the price at which it opened at. So that is why this morning my criteria for a bearish bias, okay, even though it was gapping up 9 points, was actually in place because of the fact that it couldn't stay above the price it opened at. Remember, just because something's gapping up 1% doesn't necessarily mean that's a bullish open, all right? So at that point, I said, bearish bias on gap and fade with holds below 590, targeting 585. Neutral was going to be just channeling between 588.75 and 591.75, and that that didn't happen. So you know, you got the break below the opening price on the gap, you had the fade, and then you can see once it broke 590 today, so 590 is right here. Once it broke 590, look at these weak extensions above it. Really couldn't extend past 590. And then here later in the afternoon, and it held below 590 all day. So, you know, that's the key thing to note though, is that, can other people hear me? People saying they can't hear me. Okay, so, but again, the key thing for me was, what did I say? To be bullish, needed a break and hold of 590. I wanted to see the volume pace set up for it to do 20 million shares on the daily chart. And I wanted the 15-minute volume pace to be greater than 600,000 shares between 10:45 and 12 o'clock. So 90, and within a half hour, you could see that the volume pace was not that good. It wasn't on track to do 20 million. And at 10:45, you had one bar of 600,000, but then the next candles, 400, 275,000, 515, 280,000, 150,000. And so when that was happening, when the pace wasn't really there, around 10:45, let's see. Yeah, so shortly at around 11 o'clock, I noted that the volume pace isn't very good for day trading, because it just wasn't really making consistent moves. So you got to adjust accordingly, and now, you know, we'll kind of be set up for tomorrow. So, and for those of you who also follow Apple, just if you want to know, I had support today I had 5 different levels: 588.40, 586.62 to 587.38, 585, and then 579 to 580. Yes, there's support at 583, but to me, there's no reason for it to go back below 585, and if it does, you know, it's probably coming back down to 580. So, things I want you guys to take away here, though, is that coming into each day, before I come up with kind of 3 scenarios: a bullish expectation, a bearish expectation, and a neutral expectation. And that really helps me take the first few minutes of trading and, you know, kind of formulate my plan for the rest of the day. Okie dokie. So let's get on to some stuff here. So first thing on Apple that I note in my notebook as I'm preparing for the next day, note the closing price, 586.19. Okay. Also, I note the daily range, 585.50 to 594.59. And then I like to kind of make a little statement, just a thesis, I guess, well, not necessarily a thesis, but just kind of a one-sentence observation. For today, coming into today on 12/3, my statement was tight ranges last 2 days, can't really hold 590 on the daily yet. On 11/30, so on Friday, my statement was 200-day moving average at 595.68. Apple not rising faster than it fell on the daily still looks bearish to me. on, just trying to give you guys an idea of these types of statements. On 11/14, I noted if Apple has bottomed, there's no reason for it to go back below 540. Okay, so just with these statements, I just kind of like to make a general observation to help me form what's going to be my overall bias. Okay, so for tomorrow, going into tomorrow, what I'm going to say on Apple is still can't hold 590. That's my first kind of observation. Still struggling with 590. Okay. And 580 could be a magnet if 585 doesn't hold. Also, watch for volume increase. Volume was very low today, so you need more action tomorrow. Lastly, ranges still tight. Ranges still tight. Still have this really tight trading range on Apple. Okay, so now after that, I like to come up with my kind of what to watch for. You know, this would be like if you're watching a basketball game or a sporting event, and you know you're watching for one player to score 5 points, because when he gets his 5 points, then the team has a really good record or something like that. So for instance, today, coming into today on my what to watch for, I mentioned this. I said break and hold of 590, volume pace greater than 20 million on the daily. Okay, so what to watch for today, or for tomorrow rather? Well, if you look at the 60-minute chart, Apple's really just stuck in this range. And the 15-minute opens, okay, have been generally pretty tight these last 3 days from open to close. You had a $2 open to close 15-minute range on last Thursday. You had a $1.80 open to close range on Friday, and you had a $1 open to close range on today, okay? And so open to close ranges on the 15-minute have been very tight, and those have done a good job of hinting that the range for the entire day is probably going to be tight, and there's not going to be as much volatility. This, if you compare it to some of our open to close ranges, okay, check out the day of the crash, the open to close range on 11/16, $3 open to close range at a volatile day. Open to close range on the day of the huge gap up, another $3 open to close. Okay. Open to close range on 11/20, huge. I mean, that's 7 points, and that day you had a really volatile day. So, what to watch for? First point, open to close range on 15-minute open. Okay? Again, why is that what I'm watching for? Because if I get one of those wider open to close ranges on the 15-minute open, that's going to signal to me on Apple that we're going to have a more volatile day. Okay? So that's my first thing that I'm watching for. Second, what I'm watching for, I want to see some large volume at the 15-minute open. Today we had 1.5 million shares, but Friday we had, oh no, excuse me, that's Thursday we had 2.2, Friday only 1 million, Thursday we had 2.1 million. So I'd like to see greater than 1.8 milli volume pace at 15-minute open. Okay. One of the things I've started doing that's helped me recently, I put a lot of emphasis on the volume pace at the open. I need to start also paying close attention to how much volume is trading at different points in the middle of the day. What I've found, just kind of a feeling, is that between 10:45, all times Eastern here, between 10:45 and 12 o'clock, there's usually some good activity. Maybe that's because the Euro market closes at 11:30. You know, for whatever reason, there seems to be some good action. So I've started kind of making a note about what type of volume pace I want to see starting around 10:45. So if you look today, that volume pace started pretty good at 560,000 shares, but it really trailed off. Okay, so I want to see, and I wrote this today, and I'm going to write it again tomorrow. And again, that's one of the best things about preparing, is if you prepare really well for one day and not that much happens, well, that preparation you did for today will still be applicable for tomorrow. Okay, so 15-minute volume pace, I'm looking for greater than 600,000 shares between 10:45 and 12 o'clock. So okay. And then a couple other things I'm watching for. SPX, S&P 500, 1400 to 1405 is key support. And then 1415 has just been some congestion. Watching that. And then on the VIX, take a look at it, the VIX, can it break this 17 level that it hasn't been above since November 16th? Coincidentally, that's the same day Apple bottomed. Okay? So, VIX greater than 17. That's what I want to see. That's what I'm watching for. No, I don't follow the bond market. So, as a recap, and again, this is all in relation to Apple, what to watch for: wider open to close range on 15-minute. Let's call it $2.50 to $3. Does everybody understand what I mean by open to close range on 15-minute? Okay, good. So now after I do that, so what to watch for, WTW4, then I move on to L2W, levels to watch. Well, trying to find an example that kind of talks about what Pub said, the question he had. I mean, the reason I put more emphasis on the open to close as opposed to the wicks is because I feel that between the open and the close is where the majority of the volume traded, so that's a more accurate representation of the action. You know, like here, for instance, on Friday, if you look at the 15-minute, the low to high, the wicks was a $3 range, kind of suggesting a wider range, okay? But if you look at the open to close, it was less than a 1-point range, suggesting a very tight daily range. And if you look on the day, the range was 588.40 to 582.68, a very tight range on Apple for anybody who is familiar with the stock. That is a tight daily range on Apple. Okay. All right, levels to watch. I do resistance first. Let's see, resistance levels that I'm watching. Well, you can see these lows here kind of acted as support on Apple, right, for today. You had a sell-off, and this is really where you got your first meaningful bounce from 587.46 on up to 590.88. Okay, so I'm going to go ahead and say this low here, 587 and 587.50, that's going to be my first resistance range. Sometimes it's a price level, other times it's a range. So 587 to 587.50 is the first resistance level I'm watching for tomorrow. And what's also interesting about that, I believe that's kind of near the midpoint of Apple from last week's 582.68 low to the, to the 594.25 high. Got it written somewhere. Oh, okay, 588.75 is the midpoint that I was referring to. So 587.50, and then 588.75, as that's the midpoint. That is the midpoint from the low to high of this low last week, or the low to high of the daily ranges from the last 3 days, which have been very tight. Okay, and then 590, 591. That should hopefully be obvious. You can see on the daily chart, and if you watch level 2 today, you could see that it just really couldn't extend past 590 and hold any gains. Now, if it breaks 591 again, there is technically resistance, up here at 592.40, and then today's open of 593.60. But to me, if it's able to break past 591, then it's kind of off to the races towards 600. It's tested 590 3 or 4 times, I believe, the last few days. Let's take a look at the daily. Yes, so we've got 1126, high a day, 590. 1127, high a day, 590.42. 1129, high a day, 594.25. Open, 590.22. Today, high a day, 594.59. Open, 593.65. So, notice that we're still closing below 590 each time. But so, to me, if it can finally break back above 590 again and stay there, now that'll put enough conviction in my mind that it's going to test that 600 level. So 590, 591 is really, really key resistance for me. Okay. Above that, it would be today's open, 593.65 to today's high of 594.60, and then 600. Okay, let's talk about support. Friday's close and today's low, 585.28 to 585.50 is my first support level that I'm watching. Okay, and 583.25 is the overall midpoint from last week's low to last week's high. Okay, why is that midpoint important to me? Well, if you go below it, now, hypothetically, 50% of anybody who initiated a position in Apple last week is down. Okay, it's below their average. So that's why I always pay attention to weekly midpoints. So, but again, I said earlier, if Apple breaks below 585, to me 580 is a magnet. So 579 to 580 is my next support below that. And then you've got Wednesday's open at 577.27, 575 psychological. And then last week's low, 572.26. Okay, and then I also like to kind of, in addition to picking specific price points, I like taking high volume bar ranges and kind of paying attention to that. So for instance, this 15-minute range at the end of the day, 585.50 to 587.46. Just going to make a note, highest volume range in the afternoon. So, I just want to watch that range tomorrow. A lot of volume traded there, or highest volume traded there in the afternoon, so let's see if maybe it comes into play tomorrow at the open. Alright, so now is when I like to come up with my three scenarios, bullish, bearish, neutral. So, first thing I'm going to say for bullish, see you later, buddy. Bullish, I'm going to use that 588.75 level. So, break and hold 588.75 with approaches towards 590 on 15-minute volume greater than 1.8 million shares. Okay. That's my bullish scenario. Or holding 583, no, excuse me, or holding 585 on low vol, because I want to see low volume on the pullback. Okay. Bearish. Break and hold below 585 with approaches towards 583.25, that midpoint range I talked about, on 15-minute vol greater than 1.8 million. Or rejections, okay? So, in other words, it approaches a certain price level but can't get above it. Or rejections below 588.75. And the one that is easiest to forget about, my neutral expectation, or scenario, if you will, is going to be a Apple greater than 585, but less than 588.75 without volume pace that has been outlined for of 1.8 million shares. Okay? So to recap, my bullish scenario on Apple is a break and hold of 588.75 with approaches towards 590 and the 15-minute volume pace showing greater than 1.8 million shares, or holding and bouncing off of 585 on low volume. Okay? Bearish scenario, a break and hold below 585 with approaches towards 583.25 on a 15-minute volume greater than 1.8 million, or rejections below 588.75. Neutral, Apple greater than 585 but less than 588.75 without the desired 1.8 million shares trading in the 15-minute interval at the open. Now, just explain, I'm sorry, it's not on a computer, it's on my notebook. Explaining some of the terminology. So I say break and hold 588.75 with approaches towards 590. Okay? That's kind of hard, right? I mean, how do you know if it's going to approach 590? If and when it does approach 590, haven't you already missed the trade? Well, think about today. Who was watching? Is there anybody listening right now that was watching Apple's level 2 actively today? Specifically early in the morning for the first hour and a half. Okay, good. Publicist, that's good. So you saw how it broke 590, right? And it traded up to 591, but in my view, it didn't approach 591 on the 590 break. Okay? What do I mean by that? It didn't break 590 and then 2 seconds later it was at 591. That is not what you saw. Instead, what you saw is you saw it break 590, then it churned 590.20, 590.30, 590.40, back to 590.20, back to 590.50, back to 589.90, back to 590.60. You know what I mean? That, you've got to pay attention to that. You must notice when that is happening. Okay? That is a lack of conviction. That is an invitation for shorts. Same way on the downside. If you break kind of one of those round levels and you don't flush a point or two right away, then you've got to be careful about shorting that breakdown. So when I say break and hold 588.75 with approaches towards 590, I mean that what I'm looking for is if Apple breaks 588.75 tomorrow, that very next instant, I want to see it pressing towards 590. Okay? On the other side, if it breaks and break below 585 with approaches towards 583.25, within 30 seconds, I want to see it testing that 584 and breaking 584. Okay? If we don't get that, that is just, there's not going to be a lot of volatility. And what might be our clue that we are going to get some of those quick moves? Well, if we have a wide open to close range on the 15-minute opening candle. Okay, that could be a real signal here. That's why I say that's something to watch for. And that's why I do my kind of what to watch for before I do my levels and my scenarios. Okay? And then lastly, what I like to do is just kind of come up with a gut feeling and just write down a gut feeling so that when I go to sleep tonight and I wake up tomorrow, I can see what it's doing pre-market. And if it's doing if what it's doing pre-market is kind of in line with what my gut feeling already was, okay, then now I can have a little confidence and start really feeling good about one of my scenarios. Or I have a gut feeling and it's just completely wrong, then I can just kind of scrap that. And I can know not to be stubborn. Don't be stubborn because your gut feeling was wrong, okay? So my gut feeling with Apple personally, I'm going to say gut feeling, to me, it's acting, Apple is, like it wants 570s. And maybe even 560s. Sell-off number 2, question mark. And then lastly, I just take a highlighter and just kind of highlight some of the key things I'm looking for. I highlighted the key resistance at 590, 591. I am highlighting the key midpoint resistance at 583.25. Okay. I am highlighting break and hold of 588.75, highlighting break and hold below 585, highlighting the 1.8 million in volume, and that's about it. So, that's the quick side of how I prepare for my day for tomorrow. But then tomorrow I'll wake up and I'll observe the action pre-market, and just to give you, so that's done in one notebook, and then in a separate notebook I kind of do my logging, which I showed you guys a picture of. I just pasted it again so you can kind of see what I'm talking about. Just some examples. So at 9:13 a.m. I noted that Apple is gapping above 590 on average pre-market volume. Okay. At 9:15, Apple looking bullish with 1% gap higher. My gut would say 600 today, but watch to see that first whip at open if it can stay above the opening price of the gap. Obviously, it didn't do that, so so much for my gut call of 600, and I adjusted right away. I'm sorry, Arn, I'm not going to answer questions about other stocks, just because that's not fair to other people who might want some insight. But if you have questions based on, why I choose certain levels, or why I choose certain volume frames or targets, relative to what I just talked about, those are the questions I'll be happy to answer right now. All right. So no questions then, it seems. Okay, my point about 590 and why 590 is so important really has to do with kind of what I noted just coming today, and what I'm noting again for tomorrow. So coming into today, I said tight range last 2 days, still can't really hold 590s on the daily. And that's coming from the fact that we've had 1, 2, 3, now 4 times where it's attempted to break and hold 590 and it hasn't been able to do that. And what you saw today, okay, if you look at the 1-minute chart on Apple and you look at when it broke 590, which was right around here. Okay, so it broke 590, right? Here you've got this move below 590, and then the kind of pulled back. And then let's look in here and look at what happened once it then tried to break back above 590. Well, you had this candle here top out at 590.26. And again, this is a 1-minute chart, okay? And what I want you to notice here is it broke 590, yes, traded up to 590.60, but then a minute later it was back at 590.20, and then a minute after that it was back at 590, then back up kind of 590.60, going sideways here, sideways, 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 more down action, another little bump up, sideways, sideways, down, up, down, sideways, blah, blah, blah. All right? My point is that's not a clean break. That's not something you should respect, okay? What you should respect is if it breaks 590 and then within 30 seconds to a minute is testing 591, okay? And one of the things I like to ask myself is does it keep coming back down to 590 or does it keep coming back up to 591? If you look at Apple, so we broke 590. Let's just count the times it comes back to 590 versus going back towards 591. So you break 590. Here's one time back to 590. There's one time back towards 591. Here's two times back to 590. Never even really got back up to 591. Couldn't even break 590.50. Still only one time. Three times back to 590. Still couldn't even break 590.50. Four times back to 590. Okay? Then you finally had it come back towards 591. So that's two times back towards 591. Followed by a fifth time back towards 590. Then you had another move kind of back up here towards 591. So now you got three times towards 591. Up, back down, six times towards 590. Four times towards 591. Seven times back down towards 590. Okay? So that's the point. How would it be ideal? Arn, what would have been ideal is this action right here. You see this candle? Okay? If this candle would have been followed by another candle that went from 590.50 straight to 591, that would have been a much different scenario. Okay? And guys, it's all psychology. You have to remember, people like me are looking for not for the 590 break. People like publicists are looking for the 590 break. Therefore, the 590 break becomes important. And when it happens, we have a certain expectation. Okay? As I said, I was looking for a 591 test right away. So what happens is if you break 590 and you just go sideways and you don't get to that 591 right away, what type of appetite does that put in my mouth? It's not scaring me into thinking I'm going to miss a big move. I just saw it break what I thought was a key level, and now it's not doing anything. So why should I feel pressure to get into the stock? Okay? Versus Apple breaks 590, goes to 591.50 2 seconds later, and now it's back at 591. I'm buying all I can at 591 because I just saw it rip $1.50 in 2 seconds. Okay? Compared to today, where it breaks 590 and then it comes right back down and just kind of goes sideways, it's not really, it doesn't feel to me that there's a sense of urgency to be buying it. Okay? That's why pace is very important. How quickly is it moving higher? How quickly is it moving lower, etc.? It doesn't matter why. It just matters that, understanding the implications of your observation. That's the most important thing. Break a key level and no real upside seen, then, you have to think about the sense of urgency of the market. Is the market going to feel like it's missing something? When Apple broke back above 590, okay, and just went sideways, traders didn't feel like they were missing any real move. All right, guys? Anything else? Yeah, well, the trade, I mean, you tell me. For me, my setup was a 590 break, hold, and push. Okay, so break 590, touch 591 right away, and if it didn't really break towards 591 right away, then I wasn't going to be very excited about that. Let's see. At 10:24, 10:36, I took profits on a trade. So at 11:15 a.m., I noted that there's a 590 test. And then at 11:19, I noted that the volume pace wasn't that good. And then at 11:37, I noted another 590 test and cross. Shouldn't have taken 20 minutes. That's what I wrote down. So, it shouldn't have taken 20 minutes to do all that above 590. So that, to me, there wasn't really a bullish setup there. But, yeah, the trade would have been, it sounds like to me, if you were just waiting for 590 break, you got the 590 break, you get in, and now you kind of say, all right, now it just needs to hold 590, 589.50 towards 590. You could see that these were the lows, right? 589.40, 589.52, 589.58. And if you zoom out, kind of once these lows here broke, that was your stop. And then you can see also how these lows then acted as resistance later in the day. That's just simple stuff that we talk about. So to me that wasn't a bad trade, but you just have to ask yourself, did I miss something as to the overall direction for that day? And that's where I talk about just because the price is gapping doesn't mean it's a bullish open. Okay, so publicists, what I would maybe do is go back and, as best as you can, analyze the open on Apple and just see kind of what you think about it, what the bias should have been. Because for me, what I saw was I saw a gap right near last week's high. And then within minutes, I saw an inability to stay near last week's high. So that, to me, is why I started getting short. Usually, guys, in my experience, trades that don't work out for you, that come after the first hour of the day, usually has to do with something you missed that happened within that first hour of the day. Okay? I feel like a lot of the answers to the market throughout the day, how it's going to trade during the day, are answered within the first 15 to 30 minutes of the actual day itself. Yes, Laker, my first trade was calls. I entered calls right away at the open when it gapped. It gapped, and then it had this candle right here, I believe. I know. Let me go back and look at my notes. Yeah, so I bought right away at the open when it gapped up, and I liked that it was holding towards 593.60, 65. But then once it got like more than a buck away, I got out right away. And then I watched to see if it was able to cross 593.60. And then this candle right here, so you see this, so it pulled back, and then you see this candle right here, high 593.63, and then it gave up all the gains the next sequence. This candle right here is when I got short. And the reason my first trade was calls is because within the first 3 minutes, it looked like a good open to me. It was holding that 593.65. It kept coming back to it. My first trade of the day was a loss, but I cut my loss right away as soon as I I wasn't stubborn, and then every trade from that point on was a winner. So, and I actually kind of told myself, I wrote down, I like to write down, the things you do good and the things you do bad. And what I said today was, good job getting in and out on the first trade right away, allowing for better positions with minimal damage done. All right, guys, that's the